Okay, so I mean, in this short or brief time we have together, just to share, what I call my Bollinger breakout strategy. I use it for trade. I use it for scalping, basically.
Police.
It's used for scalping. I mean, you can see it's currently over 11 pips. Somewhere here to the right. Usually I would target like anything between 10 to 15 pips. But if I feel it's going to go even higher, or if I feel it's going to deliver more pips to me, I would stay in longer. But ideally, for targeting 10 to 15 pips, this is one of my trading strategies this is one of my scalping strategies. I have a couple of scalping strategies, and this is one of the good ones. So okay, I'm going to just mute everybody. Let me just mute everybody. Or I mean, if you could mute yourself so that we don't have the background noise. Now, basically, the way it works, I mean, of all the indicators out there, even though I am now getting to like the Ichimoku cloud, of all the indicators out there, the one I love the most is the Bollinger Band. That was because some guy I learned, or someone I would call a distant mentor. When I first started trading, many years ago, basically was and still is a master at using the Bollinger Band. Without name dropping, he is very good, and he has had a couple of encounters with John Bollinger himself, the man who created Bollinger Bands, and I learned a lot, using a lot about how to use the Bollinger Band, even just following him closely. Anyway, I mean, I call this the Bollinger breakout strategy, for scalping. Now, look at this. Let me just close that. Let me take that off. What tends to happen is when you've had a period of consolidation, at some point there will be a breakout, either a breakout to the upside or a breakout to the downside. In this case, there was a breakout to the upside. But you notice here, even with this breakout, the candle, the price retraced and closed back inside. That's another strategy, which obviously we're not going to be looking at now. We're going to be looking at how to basically, trade, follow the trade, go with the price, as it were, even as it breaks out of the Bollinger Band. Now, it was basically just consolidating here between this space is basically, it was just the candle, going up and down, almost as though it's not decided what it wants to do. But then, when we got to this one, it broke out. It breached the upper Bollinger Band here, but because it came back and closed in, I wouldn't have traded it the way I've taken the trade now. I would have traded it differently if it had, if it closed here like it did, and this basically continued down. I would have basically taken it down. But because the next candle was green, I basically carried on waiting for the next proper breakout. And I would say this was when, that moment came, when there was a proper breakout. It broke out and actually closed outside of the Bollinger Band. So what I would usually do, is to enter when the candle closes. In this case, it went that high and came back down and closed here. But even as you can see, I entered here. And I entered at this point because I wasn't by my computer when this candle closed. I only caught this long candle when it was developing. It was somewhere around here, and it was basically going up and down, well, back and forth. And I knew it was going to carry on up. So basically, I entered there. And you can see, it basically went up, closed there. The next candle opened and closed lower. But that's fine with me. I knew it was going to basically carry on up. As a matter of fact, after the webinar, I would close this trade. I mean, I could decide to close it now. Just 1 minute. Just 1 minute. That's one of my one of my team members. But anyway, I mean, like I say, I mean, I could decide to close it now if I feel it's going to now. I don't want to lose pips to the market. I don't want to give back what I've gained so far. So anyway, that's in a nutshell how I do trade this. Now, you might want to know some of the reasons why I would decide to take this trade, or why I believe this trade is going to be going up. One of them obviously being the fact that the Bollinger Band is actually pointing up to some extent. You can see it's kind of like pointing up. This obviously is the moving average. Well, that's the upper Bollinger Band, the lower Bollinger Band, and then the moving average in the middle. You can see, even from this point, it's been pointing up. And all the candles are basically tugging on the upper Bollinger Band up until this place, where it kind of like came inside the Bollinger Band, carried on up, and basically, hopping around the upper Bollinger Band again. Okay, I mean, this is, for a buy. Let's just scroll back a bit and see if we can find an example for a sell. Now this is a sell. This would have been for a sell. I have missed a lot of trades lately. I've been quite busy, and it would have been good to jump in on some of these trades. Now, this one, for instance, this is a massive, bearish candle. I mean, I would have entered this one immediately closed without waiting for the next one to open. Why? Because it was a major move on the part of the sellers, if you like. So it broke the Bollinger Band there. I would have jumped in anytime, here. Even sometimes, to be on the safe side, you might even want to wait for the next candle to retrace. Knowing fully well that it's going to go back down, you just basically wait for it to retrace, so you could have more pips, as it were. Otherwise, you could enter a sell here, and if it retraces, it basically gives you a better opportunity, as it were. You could take a second trade. Now, one of us on here talked about being greedy a while ago. That's something we are all guilty of. Sometimes we get greedy and end up losing, in even what we've gained. I would say go for 10 pips. I mean, you can see now it's currently over 17 pips. I might say, okay, fine, I'm just going to go for 25 pips and 30 pips. And before you know it, the market pulls back and you lose every single thing that was on the that basically the market had given you. So, I mean, I would say, go for 10 to 15 pips on the 1 hour candle. On the 1 hour candle. I mean, once you've mastered it, you can then begin to trade the 15-minute time frame and go for more pips if you like. I'm sure obviously, the bigger the time frame, the bigger the candle will be, and the more pips you are likely going to get. So, okay, anyway, I'll take some questions. I didn't want to take some questions, but I mean, I think I'll take some questions. If you have any questions, just ask.
So basically, you're just following the Bollinger Band?
Yes, I mean, I would say so. I mean, people want to say following the price, as it were. I would say following the price, obviously with an eye on the Bollinger Band.
Okay.
You know, because,
So,
yeah.
so the only way you know to enter the market is when it breaks through. Let's say it's going in an uptrend, and it breaks through the top band. That's when you know when to enter the market as a buy.
Yeah, I mean, yeah, exactly. As a buy, and if it is the case that it breaks down, it breaks out to the downside as it is here, as it is here, then that would be a sell, obviously.
Okay, so how do you know when to get out? That is changing directions. Are you using the doji a doji candle or what? What's your indication?
Okay, just a minute, let me minimize this window. Okay, I mean, as with this one, for instance, I mean, even though like I saw, even though the next candle, closed as a bearish candle, I stayed on. I stayed on because I saw that the Bollinger Band is pointing up.
Okay.
So you can see the Bollinger Band is pointing up here.
Right.
The moving average is pointing up.
Right.
I mean, if it was a sell, obviously they'll be pointing down as they. Let me.
So the moving average and the band has to be pointing in the same direction. That's how you know if it's bearish or bullish.
Well, okay. As a matter of fact, that's a good question. Well, they have to be pointing in opposite direction, actually, not in the same direction. Because you find that you can see this bit, for instance. The what's it called now? The lower Bollinger Band is pointing down,
right,
and the upper one is pointing up.
Right.
There are times when they basically are more or less like facing each other, like here, when there is a squeeze.
Right.
But at the point of the breakout, there is the Bollinger Band expand. We call it expansion. Whereas here, you can see at this point, they are pointing in the same direction, or almost like closing in, like there's a constriction.
Well, when I meant going in the same direction, I meant the top Bollinger Band and the EMA are going in the same direction. That's how
Oh,
you
yeah.
know if it's
Yeah.
a bullish or bearish.
Yeah, absolutely.
Okay.
Absolutely. Yeah, absolutely. I mean, yeah.
And then you said I don't think you touched on how do you know when to get out?
Okay, I mean, I would I would go for my 10 to 15 pips and get out.
Okay.
And wait for another opportunity, I mean, because what you don't want, I can tell you, even though I got in on this long candle, I saw it just basically rising very quickly before my eyes. What you don't want, obviously, is for it to drop quickly before your eyes.
Right.
So I mean, because it can happen. I mean, it could be something in news that basically sparked the move. That same, well, obviously, sometimes when you have some news reports, there's a big drop or a big spike. But then when the big guys, the investors, quickly analyze the situation or the news report, and they realize, okay, maybe we made a mistake with that, they then sell. If they are bought, they then sell, and obviously that means that the price moves in a different direction or in the opposite direction, or perhaps it could be with a huge spike or drop. Some of those big guys might decide to quickly take profit, and obviously that reverses the trade. So I mean, in answering your question, to when do I know when to get out? Once I've got my 10 to 15 pips, I get out. Or if I kind of like, obviously because it's a scalp, you are by your computer anyway, you're monitoring it. You basically, like you say, you could look for doji or look for some other patterns which might indicate that the trade is going to go against you.
Okay, thank you.
Okay, I mean, having said that, let me just close the trade. Just a minute, let me close this trade. I know it might go up even more, but I'm not bothered about that now. Okay, I've closed my trade. So, I mean, I don't know if you have, hello, Eniola, long time. And I know you probably can't speak now, a busy man. But I don't know if there are any more questions so that we can wrap it up. But I mean, like I would always say, I'm sure, like as well, it takes, practice. I mean, just practice, and you would perfect it in due time. Okay, I mean, if there are no more.
I got a question.
Okay.
Okay, so you don't use the web analyzer, you just go with just looking at any pair and looking at them.
Yeah, I mean, I would basically, I mean, obviously, with time, you get to know which currency pairs, will give you enough pips. I mean, there are some currency pairs, for instance, which might not move in such a big way like this, or you won't have big candles like this.
I don't have any because I didn't start at the beginning.
Okay, I mean, for instance, I mean, we are on the 1 hour time frame, and let's see this kind. I mean, these are the smaller candles you can see. These are like not the typical size. But if you measure this, you see that this is at least 24 pips compared to these ones, which are kind of like small, just 3 pips. Let's look for another one, which is slightly bigger. That's 13 pips. But if you were to go on the 15-minute candle, 15-minute time frame, okay, I mean, at least you can see in the last hour or so, all the candles were big. All the candles were quite large. But before then, they were small. Now, okay, fine. It's good we've come here now. Now, when you see such consolidation, just know that the price is going to explode at some point very soon. When you see the candles just in a tight squeeze like that. Usually after a squeeze, it comes an explosion or expansion. I mean, even though this is the 15-minute time frame, that would have meant you would have had to wait quite a long while. As a matter of fact, that would have meant you had to wait, say about 32 candles, wait for 32 15-minute candles, which is a lot of minutes to wait. That would have been well over 3 hours. Anyway, I suppose that's it for even this session. Unless there's any final question, I could stop the recording.
Are you going to send a link for us to rewatch it?
Yes, I will.
Okay.
And
thank you, because I didn't start with you, so I didn't get the whole thing from the beginning.
Okay, that's fine. I mean,
I'll watch the recording.
Yeah, it's recording now, so I mean, I'll send the link shortly.
Okay. Thank you, sir.
Thank you. Okay, so I am going to be, stopping the recording, even though the webinar is going to carry on, because I need to quickly also go through the TK cross. I mean, I suppose Eniola could help us with that as well, because I know well, you are the one who gave us this indicator. Just 1 minute.